Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY25 earnings conference call of Sigachi Industries Limited, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Priya Sen from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good afternoon, everybody, and welcome to Sigachi Industries Limited earnings conference call to discuss the Q3 and 9 months FY25 results. We have on the call Mr. Amit Raj Sinha, Managing Director and Chief Executive Officer, Mr. O. Subbarami Reddy, Chief Financial Officer, and Mr. Vivek Kumar, Company Secretary and Compliance Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Amit Raj Sinha to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Priya, and good afternoon, everyone. I extend a warm welcome to all of you to the earnings conference call of Sigachi Industries Limited to discuss the financial and operational results of Q3 and 9-month FY25. The financial results and investor presentations have been shared on the exchanges, and I trust you have had the opportunity to review them. Sigachi continues its journey of steady growth and strategic expansion. This quarter, our core business in pre-formulated excipients delivered robust performance, with both revenue and volume increasing by 29 and 22.5% year-on-year for the 9-month period. These results underscore our unwavering commitment to providing high-quality products and solutions to our customers. Our R&D initiatives remain a cornerstone of our operations, driving innovation and continuous improvement. This focus enables us to expand our capabilities and deliver products that set industry benchmarks. In our O&M business, operating as an asset-light model, we have maintained strong momentum by partnering with esteemed clients like Gujarat Alkalis, Aditya Birla Group, ONGC, Lords Chloro Alkalis, and Adani. We are strengthening our footprint here. Exciting opportunities lie ahead, particularly in the Middle East, where we are making strategic inroads. Our foray into the API segment last fiscal continues to gain traction with a focus on catering to domestic markets while diligently working on obtaining the required certifications for expansion into regulated markets. Of the 9 CEPs targeted for filing this fiscal, we have already filed 4, marking a significant step towards enhancing our access to regulated markets, which will boost our top lines and margins. We already possess 20 acres of SEZ land in Dahej designated for our development of complex excipient and cross-carbamylose sodium. The groundwork has already commenced and the necessary regulatory clearances are underway. This facility is expected to further strengthen our leadership in excipient manufacturing upon completion. I'm also proud to share that our Sultanpur facility has been audited and approved by Intertech on behalf of Global Alliance for Improved Nutrition, that is GAIN. This recognition reaffirms our dedication to the highest quality standards, enabling us to supply a premium base blend brand of vitamins and minerals premixes to clients worldwide. I would like to emphasize that Sigachi's unwavering commitment to R&D has been instrumental in broadening our product portfolio. The company delivers exceptional products across pharma APIs, intermediates, pharma excipients, film coating, and food and nutrition segments. Our comprehensive presence across the pharmaceutical ecosystem not only diversifies our revenue stream but also strengthens the long-standing relationship we have had with our leading formulators. As we continue to diversify and grow our presence across 65+ countries and 2 strategic joint ventures established last fiscal with Saudi National Projects and iConnect position us strongly to capitalize on emerging opportunities across products and service lines. At Sigachi, our focus remains steadfast on quality, innovation, and sustainable growth. These pillars, combined with our diverse portfolio, ensure enduring value for our stakeholders as we build a future defined by excellence and trust. I now invite CFO Mr. O.S. Reddy to share the financial and the operational highlights for the quarter. Over to you, Mr. Reddy.
Thank you, sir. And good evening, everyone. Let me take a moment to brief you on the financial performance for Q3FY25. The company delivered a strong performance this quarter, showcasing robust growth across key financial metrics. Operating income increased by 25.7% year-on-year, reaching rupees 139.41 crores. EBITDA witnessed a significant growth, rising 46.9% year-on-year to rupees 33.2 crores with an EBITDA margin of 23.81%. Net profit surged by 26.54% year-on-year to rupees 20.51 crores, translating into a PAT margin of 14.7%, building on the momentum. Revenue from the MCC segment rose by 56.72% year-on-year, increasing from rupees 73.53 crores in Q3 FY24 to rupees 115.24 crores in Q3 FY25. Revenue from the O&M segment grew by 12.91% year-on-year to rupees 9.88 crores, while the API segment continued rupees 8.85 crores during Q3 FY25. In addition, the strong operational and financial performance, we are pleased to report that the company continues to maintain a stable financial position. CARE Rating Limited has reaffirmed Sigachi Industries Limited credit rating for its bank facilities, maintaining a stable outlook with a rating of CARE A- for long-term facilities and CARE A-, CARE A2 for long-term, short-term facilities. As we move forward with the execution of our strategic growth plans, we remain confident in achieving greater economies of scale and improving operational efficiencies. These efforts set a strong foundation for our sustainable growth and long-term value creation for our stakeholders. This concludes my remarks. We would be delighted to address any questions you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dipesh Chaturvedi from Manya Finance. Please go ahead.
Hi, am I audible?
Yes,
you are.
Yeah. Hi. My first question is, when will the new MCC capacity reach full utilization?
For the Q4 of FY25, we are looking to touch 50% capacity utilization. I believe in the next 4 quarters thereafter, we should be able to touch 80 to 90% capacity utilization.
So, sorry, could you repeat that? In Q4, you're expecting it to be fully commercialized. That's what it said, right?
So it's already fully commercialized. We are already at around 35 to 40% capacity utilization. In Q4, I expect us to cross 50% capacity utilization of the new added capacity, not the old capacity. Old capacity is already hovering around 90, 95, 98%. The new capacity, I expect it to be touching 50% in Q4.
Okay, and by next year, by FY26?
Yeah, so by the Q4 of next financial year, I expect it to touch in the range of 80 to 90%.
The new capacity?
Yes, that's right.
Okay, and when will the CCS plant be expected to commercialize?
So I'm expecting the environmental clearance in the next 4 weeks. So there has been a file movement in the last 2 weeks, and I believe once the environmental clearance comes in, we will commence our civil works for the CCS project. Right now, we are only doing the boundary wall and the non-EC activities.
Okay. And how much does it, how much is the new MCC capacity would contribute to the revenues?
Here, already last year, we achieved a turnover of 13,469 metric tons by March 31st, 2024. Now, during 9 months, we achieved 12,682. This is combined. In 9 months itself, almost we'll be reaching 13,649 last year's whole turnover, and in 9 months we achieved 12,682. It is as Mr. told, this by end of this year we'll achieve more than 50%, and next year we'll be achieving at full operational capacity, maybe 80% or so.
Okay. And will there be any additional fund which will be required for future expansion?
Which product? Which product do we?
No, I mean, I'm trying to say overall, will there be any additional funds requirement or any capex which will be done by the company? Is there any future capex which is in line also?
Of course, whenever the growth demands, we'll go for future expansion. Always would be there, but as and when there is this thing form details are available, then we'll inform.
No, over and above that, on a regular basis, we always keep debottlenecking and looking for opportunities to streamline our processes and inch up our capacities by a small margin. When it's a drying section, then we work to see how is it that we can equip and balance the drying section, and then sometimes it's something else. So we keep debottlenecking and keep adding up capacities as we progress on our production capacity. So I think those small parts always keep coming in, and they are not major.
Okay. Now, with these approvals coming in and the capacity also increase, I mean, the future capacity also increasing, how will our margins improve, and how will our ROE be the same? We're right now doing around 16.5%. Will we reach towards the 20% mark, or we expect the ROE to be the same?
Going forward, it will definitely increase, we hope, because once the capacities are touching that higher maximum capacities, then overheads share in the per unit cost will come down, and overheads will be absorbed, and then later on it contributes the entire portion to the profits. Definitely, we hope it will increase. Yes.
Is this also with the margins?
Yes, in margins also is. Both margins also.
From last quarter, we saw a slight dip in the margins. If you can tell me the reasons for that also.
Yeah, in the last quarter, you are comparing Q2 versus Q3?
Yes, I'm comparing Q2. And also, is it right to compare Q2 versus Q3?
Yeah, because Q2, there was a PLI income is there, major around 12 crores. And when we see overall, when we see always Q3 income is lower than Q2 when we compare historically. Q4 is this is highest turnover would be there, highest turnover and margins, and next Q2, and then Q3, and then Q1 if I give the ranking. That is the reason Q3 always it is little lower than Q2. Once we remove this top line, the PLI income which was considered in Q2, then still there is this thing comparatively lower income is there. That is the reason. In Q2 always higher than the Q3 revenue.
Okay. And the PLI income which you said that it is realized in Q2, do we expect any further PLI income coming in any of the next quarters, maybe in Q4 or Q1?
Yeah. Every quarter, just I think this year we hope we'll expect around 9 to 10 crores of PLI income. Once it is approval is received, then we'll recognize. Maybe in next year, first quarter or second quarter, it may be.
Next year, first or second quarter.
Yes.
Okay. Now, how have been the funds which have been raised by IPO and preferential been used in this entire expansion? Could you give us a breakdown?
Yeah. In the IPO, we have raised 125 crores.
Yes. Yeah. And you did a preferential also, right?
Yeah. We did a preferential. In preferential, 286.45 crores we have raised. So far, we have received till quarter ending 31st, we have received 122 crores. And in that, we have spent towards the acquisition of our Trimax unit, API units. That total API unit cost is 125 crores, and 80% it is already acquired for 100 crores, and the balance 20% will be going to acquire within a period of 3 years, and there is a purchaser's call option. We can exercise it. That is 122, and there is some funds are 16.75 crores are in deposits. And the balance amount we are yet to receive around 166 crores. Now we have received around 16 crores, another 140, 150, around 150 crores we are yet to receive.
Okay. So even for future expansions, I'm sure this 166 crores will suffice, right?
Yes.
Q4. We don't need to go for additional, maybe a preferential route or higher. What is the debt right now?
Debt, as of now, long-term debt is, the net adjusted debt is zero, we can say, because there are FDs are there. And debt is mainly towards working capital is there.
Okay, mainly the working capital loan is there.
Yeah.
That is about 130 crores?
Yes, maybe 90 crores is there. That is a revolving. It comes, as of now, if you see, it is around 90 crores.
Okay. And last question would be, what is the revenue split across pharma, nutra, and food and cosmetics after receiving the GAIN certificate, and how is this expected to change?
Yeah, after receiving GAIN certificate, the food and nutra share will go up. As of now, the MCC is 80% is there. Within MCC, the major it goes towards 65% almost. It goes to this pharma, and 20-25% goes for food, and balance is for cosmetics and paints. And overall revenue, if you see, MCC is 80% and O&M it is 8%. Last year it was 9%. This year it is 8% because the other income has gone up. It's as a percentage, its share has come down. Though the absolute figures, it has increased O&M, and API is around 7%, and other income is 4%.
You have also mentioned in your commentary that you have filed for 4 new APIs. When should we see any significant revenue coming from APIs? And for going ahead in FY27, what is the mix which you see from APIs from MCC?
In this thing, now we are concentrating, we are in the process of filing regulatory licenses. Once we get the regulatory licenses, API export income will increase, wherein we get decent margins. In domestic, hardly the margins are very lower side. That is the case. And your next question, can you please repeat? The percentage you are asking in
I'm talking
API
about how much going ahead in FY27. What is the expectation from the company that this is the percentage of revenues which you need from MCC, and this is the percentage. A higher share from API.
Definitely this API share will increase, and we hope these margins are sustainable, and then even we can do better also with the contribution of API. FY27, the API contribution will be more, and we hope this growth will continue. 25-30% growth it will continue.
So can we expect about 15% coming in from APIs?
Yes, we hope
possibly more than that. Actually,
it is more than that. Yes, far more than that we are expecting.
35, 30. That's the reason I wanted the figure from the house mouth.
Yes.
Okay, fine. I'll send answer the next questions.
Thank you.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of R.A. Modi from Abacus. Please go ahead.
Am I audible?
Yes, sir. You're audible. Please go ahead.
Okay. So, sir, I would start off with the question. Margins are a big concern for the company now, considering how we are growing, considering different sectors are growing. Last quarter, we faced a heavy decline in margins, and, we weren't sure of the reasons exactly about the last quarter. So my first question would be, last quarter, why was the major decline? And it's continuing. If we see year-on-year for Q3, the margins have been declining, and investors are not able to get the returns which they were expecting before, considering the revenue growth, considering the expansion plans. Secondly, when the API approvals have started coming in, when we are starting the API production, the margins with lower capacity, are the margins going to hit more? And overall, is the company for the next 2-3 years, margins would be a major concern, or is there some ways we are trying to improve that from the year coming?
Yeah. Yes, Mr. Modi. Coming to your first question, the margins declined in Q2 and Q3. As we informed in our previous call also, we are penetrating our products because the expanded capacities comes into operational. Then we are to penetrate into the market, some price reductions we have done. And then once that is settled down, slowly, gradually we'll increase, and then our margins will also go up. First, we are concentrating on market share. That is one of the reason it is. And going forward, it will go up. And coming to your API, CEP regulations are underway. Once we go into a regulatory market, the margins also will increase. As of now, the overheads are not meeting. That's why in the API we are not getting any margins presently. Once we go into CEP filings, once we get the CEP filings, and once we enter into a regulatory market, then the margins are higher side, and then we'll scale up the operations also. Then we hope our profits also will increase in API business also. Overall, now this is because they just expanded the capacities to grab the market share. We are adopting this strategy. That is the reason in Q2 and as well as Q3 also margins are declined little.
So the overall objective of the company currently is giving preference to expansion, capturing market share from the competitors is more important than delivering value to the investors by, giving better returns. So there's a clear, I guess, preference of the company. Is that correct?
There is one thing, sir. Here there is a long-term objective and a short-term objective. In short term, we may our margins will come down little, but in long term we are looking for long-term objective. So that in long run we'll secure our market, and then we'll get decent margins. That is our strategy we are moving.
So in the coming next few years also, if we are expecting the MCC capacity to be utilized 80-90%, then we were planning in the previous quarter to further expanding the MCC capacity. So in this growth expansion phase, according to my calculations, the next 3-4 years, margins would be a major issue for the company to capture market share.
You see, next 2-3 years or 3-4 years is not. See, by next year, we'll be reaching our operational capacity maximum 80-85% we'll reach. And then even now also, we are just planning how to, once we are securing the customers, once we are known for supplying the qualitative material, and then once the comfort comes, then slowly, gradually we'll increase the price. Yes, we have different these strategies. Our marketing team, they are going ahead with that, and then let us see. But the margins, we hope with a strategy to increase the margins only, we are moving ahead.
Right. Also coming to finance cost, quarter on quarter, finance cost has risen by 100%. So what was the major reason for the rise?
Yeah, the major reason is the company is growing, and the lot of amount towards working capital it is there. Because of DSOs also, there is an increase in DSOs, and now we are trying to reduce the DSO, debtors outstanding. And also the inventory also, it is in the higher side, it's there, because with an anticipation to increase the prices of wood pulp, we have kept it in huge inventory, because that is also one of the reason, and slowly it comes down. Now we have taken a decision not to increase any this thing stock, and also receivables also we have put a target to the sales team to reduce it to 90 days, so that that finance cost also it comes down.
Also, in the last quarter, we had discussed there were losses which the company were facing from the Middle East unit, and I guess the revenues were still not coming from the Middle East unit, and it was becoming a cost center for the company. So what are the updates currently of?
Yeah, yes, in Middle East, the volume should go up to get the margins. Right now, the volumes, we are just in the process of increasing the margin, these volumes, due to top line. Once the top line increases, it absorbs the overheads, and then slowly it will turn into the profits. And also, the activities, our Sigachi Arabia, this thing, working activities, we are going to start. Once we start that activities, the revenue comes from there. Going forward, maybe in another 2 quarters, we hope we'll see a positive margin, positive figures there.
So for the next 2 quarters also, we are going to face losses from Sigachi Arabia?
Yeah, that is, the thing is, there, the operational expenses only. There are no, we don't have any setup, but only to meet the operational expenses, revenue should go up, volume should go up. But next 2 years, that is a very small but even losses also very small. But going forward, in another next 2 quarters, it will turn into a positive, we are expecting.
Also, for the API segment, what capacity utilization are we going to reach in the Q1 of FY25?
Mr. Modi, we are not really looking at capacity utilization at this moment. Our focus is to see that we balance out our cost by selling into the domestic, and in the meanwhile have our regulatory filing pipeline strengthened.
So we have received approvals, and I guess approvals were supposed to start coming in from Q4. So we are not looking to capture any regulated markets. We are not.
Regulated market capture is it's not really a it's a long activity. We have filed CEP applications. We have had certain queries and discussions to take it forward, so that process is on. But we still haven't received any CEP approval for our subsidiary.
Okay, so right now we are only planning to sell it to the domestic markets, and from which quarter are we really planning to scale up the API segment and, potentially start exporting to regulated markets?
So possibly from Q2 we should be looking at having our in the Q2 we should be looking at having our CEP approvals, and possibly from Q2, if not from Q3, we should be having sales into the regulated markets as well.
So the major growth which the company, which the revenues will be coming from, is MCC itself till Q3 of next year.
Yes. Yes, this is MCC, and of course a combination of food and nutrition, because right now we have the GAIN approval in place, and that should give us an upper hand in terms of getting additional orders from the Global Alliance of Improved Nutrition, the World Food Program body.
So strategically, the acquisition of Equinox, was that a correct move made by the company, considering the amount of capital which has been, has been deployed there, and no returns have been generating from the last 1-2 years and the coming 1 year too?
So we believe it was the most appropriate decision for the pricing that was. It was a US FDA approved facility for advanced intermediates, and we had a ready-made updated facility wherein we could transition that to APIs, and we are in the process of doing that. I'm sure you believe that the pharma industry is not very easy to break through, not very easy to come out. It takes time, and that is what is the process which is on.
if MCC is such a cash cow for the company, delivering such good margins, such good returns, why is the company not focusing quickly on expanding the MCC, getting more market share, and going into so many different segments?
So we are not going into so many different segments, Mr. Modi. They are all complementary. They are synergistic. When you're giving excipients, it's but natural that you would want to give your customers APIs as well.
Sure. Thank you. That is all from my side.
Thank you, Mr. Modi.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead. Madhur Rathi, please go ahead with the question. Your line is unmuted.
Yeah, I'm speaking. Am I audible?
Yes, you are. Please go ahead.
Yeah. So I'm trying to understand our cash flow statement. Sir, our inventory days have increased from around 60 days in 2019 to around 100 days in 2024. So why is that?
Yeah, this is we have maintained a higher inventory. This thing because there is an indication in the market that the prices will go up. That's why we have kept.
I'm so sorry, sir. I was speaking about receivable days. I'm so sorry. Receivable days, sir. Our receivable days have increased. So why is that?
Yeah, receivables. Now we have given little leverage to the customers. Now recently we have given instructions to our sales team to bring it down to 90 days. Now it is there around 107 days is there, these DSO days. And now we have advised to reduce it to 90 days. Gradually we'll bring it down. Initially there was a problem in certain countries that even though the customers are rich and then they wanted to pay it, but their local regulations and the foreign currency issues, they couldn't pay. Now we are getting it, and also we are taking this thing corrective action also. Going forward, if there is any such kind of issues are there, we are asking for LCs or advances.
So because of issues with regulations in export country, we couldn't get our money back. So
yeah, only, but almost in that also more than 50% we have received. The balance also we are receiving it.
Okay. And sir, sir, I couldn't understand that properly, sir, because when we are so due to export regulations in our customer country, our debtors have increased.
Yeah, that is one of the factor. See, they wanted to remit, but because of the currency non-availability or some issues in their bankers, then they couldn't remit. Now those things are resolved, and then we are getting the amounts. More than 50% we have received, and the balance around less than 50% we are going to get it. And also we have informed our sales team not to give much credit, so that if there is any outstanding is there, then we'll pushing them to collect for the collections.
Okay.
I'm sorry to interrupt,
it will come into
Mr. Rathi, but there is some disturbance which we are getting from your line, sir. Would request you when the management is speaking, please self-mute yourself.
Sure, I'll do that.
Thank you. Please go ahead.
Yeah. Sure. So if I look at our asset base, sir, it has increased from around 50 crores to around 270 crores. I'm just talking about the property, plant and equipment. So it has gone up by 5x. So when can we expect some kind of so first question was, sir, what kind of payback period was expected before you made any kind of investments? Sir, second part would be, sir, what is the incremental top line as well as margin can we expect from this investment that we have there? And sir, another thing is, sir, what is the 55 crore goodwill that has been created in our books? So these
Yeah,
are
that
the
is,
questions regarding the asset.
yeah. That goodwill is on account of the acquisition. When we acquire, then the consideration paid minus the value of the book value of the assets. That normally it will be kept as a goodwill. That is the acquisition of Trimax Biosciences.
API plant, right?
Yeah, that is API planters. The book value, because see the land and building and it was procured much earlier, and then the prices at that time were lower side, and we have taken the valuation of the plant, total plant, and that the valuation, and it is a USFDA approved facility, and it takes 2 to 3 years to build up that facility, and then again from there to get USFDA facility, it takes another 2 to 3 years. All these things we have considered, and then the valuation we have taken. The difference between the purchase consideration and the book value, that goes to the goodwill, that is the purchased goodwill. And your first two questions, sir, can you please repeat? Your audio also is not clear, I couldn't catch.
So these were regarding our asset base has increased from around 50 crores to 270 crores as of September end.
Which
I wanted to understand when what could be the incremental revenue and margins were expected from this, and similarly, what kind of payback period was expected when we made this margin, and when can we achieve peak utilization of this facility?
Yeah, as we informed, this growth it will continue. Now, till last year, we don't have any additional capacities to supply into the market. And now we have expanded our capacities from it was 14,000 to 21,000. In this increase, we are now in this year end we'll be touching around 50%, and next year we'll be touching around 80-85%. And thereon we'll get full capacities, and then our overheads also will come down, and margins will increase. That is one part. And the existing growth rate will continue. Means every year around we hope 25 to 30% growth it will continue. And going forward, we expect that the margins will increase. Once the occupancy of the plant increases, the margins also will increase.
Okay. And so regarding the payback period for this investment that we have done?
Yeah. What is the payback period? It would be around 3 years.
Okay. So by FY27, we can expect to get all these investments either return from an PBT perspective?
Yeah. In our business, it is around 3 years only, the payback period.
Okay, 3 years. Okay, well, thank you so much. I will get back to it.
Thank you. Thank you, Mr. Sigachi. Thank you.
Thank you. The next question is from the line of Ankur Sanwaria, an individual investor. Please go ahead.
My first question is, sir, on a standalone basis, since the volume of MCC has increased by 15%, how come the revenue has decreased by 13% on standalone basis?
Here, the volume which you are showing is that is a consolidated volume. You are talking about the 5,400 which is there. But in standalone, the volume in Q2 was 4,618 metric tons, and in Q3 it is 4,424 metric tons. There is a decline in the volume, 4.2%, because historically, if you see, Q2 always higher than Q3, and again Q4 is much higher than Q3. It is like that. And the revenue also in Q2 95.2 crores, and Q3 it is 92.51 crores. That is, there is a little decline historically, if you see also, and because of that there is around 4 crores decline is there when we compare to Q2 versus Q3.
So since you are saying that there is an indication of increase in the price of raw material, so haven't there been any increase in the price, raw material prices from last quarter?
Raw material prices is never a constraint, but we are getting it a most competitive prices, and we are sourcing at a right time, and it's not an issue. Even whatever the increase is there further, that can be passed on to the customers.
Okay. So my next question is regarding in your balance sheet, you have mentioned that you have granted the warrants on 30th August 2024, but according to me, it should be 23.
Yeah. 18 months, it's coming, 18 months will be up to February 25. February 25 minus 18.
But in the balance sheet, you have mentioned it was allotted on August 24. I think it should be 23.
Yeah. Yes. You are right. That is
right.
20. Yes,
So,
23.
So now it is only 10 days left for the period to be over.
No. It's not like that. See, not 10 days. 10th of the August we have allotted. Now the deadline is 5th. We are mostly we'll receive the amount by 5th or 6th of February.
5th or 6th of February, right.
Yeah.
So during this quarter, have you already received some amount or it is still pending?
We have started receiving the amount. Today we have received around 16 crores, and the people are keep on paying. Because from here 18th to maybe first week of February, 5th. 5th is we have already communicated to the investors also. All the people, they have started paying.
Okay, so you are hopeful that you will receive the entire money within next 10-15 days, is that correct?
Only one thing, Mr. Ankur, if the investor doesn't pay the amount, whatever they have paid, 25%, that would be forfeited.
Right.
That is an income to the company, direct.
Right. Yes. And sir, one thing regarding the treatment of the PLI scheme that you are doing, since as I understand that the PLI is directly proportional to the revenue of, let's say, the export that you are doing for MCC, if I'm not wrong. And
incremental export.
No, that is nothing to do with the export, sir. That is incremental. On incremental revenue, we are entitled till the year 2028.
Okay. So, since last time you said you showed us an other income at 17 crores, but this time you haven't shown any other income. So, is it that just...
Yeah. That PLI income, whatever we have shown in Q2, that pertains to previous year, 23-24. This year we'll be getting. We hope that will be cleared by first quarter or second quarter of next year.
So my question is that
once that is approved, then we are recognizing.
Yeah, but don't you think that it should be recognized as and when the increment sale has been made? The approval can come later, but what happens is, sir, we are never sure of the effect that it will show on the balance sheet.
Yeah, on a conservative basis, see, unless the approval is there, approval is not there. We can see all the central government schemes, MEAS is there, we have seen. And on approval basis, it is most conservative this thing way we can recognize. Once the approval is there, we can recognize.
Okay.
That is the process we are following. See, unnecessary recognizing and then tomorrow, if it is not approved, or we don't want to go for this. There is no question of non-approval also, of course, but we wanted to be most conservative in recognizing the revenues.
So the approval is generally in Q1 and Q3. Is that correct?
This year we got it in Q2, and next year also we are expecting the same thing.
So is this a yearly phenomena or it happens quarter on quarter, sir?
Normally it is a quarterly we'll submit, but yearly they will clear, sir.
Okay, I got it.
Okay, going forward they may change it also, but as of now that is the thing it's going on.
Okay. Sir, one thing more, you had targeted about 25 to 30% revenue growth year-on-year, but I think this time you will surpass 30% growth as well. Am I correct? After Q4?
Yes. You are right, sir. You are right. Sometimes it will even better than that also. But on an average, that is in the most conservative basis, we hope we'll get that. Our growth is sustainable, and then we'll achieve that growth.
One thing I'm really surprised by is that for last 3-4 years, you have consistently shown compounded sales growth, profit growth, but the share price does not reflect the way you're performing. I'm sure you cannot comment on it, but we as investors are very disheartened by the share price movement that the company is showing.
Yeah, of course. But anyway, our role is very little on that, but we can concentrate on the performance of the company, and then we can perform.
Right, sir. I think the performance has been great since the time I have been investing in the company, and I really hope that you continue your good work, sir. Thanks a lot for answering my questions.
Yeah, thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Manav Vijay from NV Investments. Please go ahead.
Yes, thank you very much, sir. Am I audible?
Yeah. Thank you, Manav. You're right.
Thank you, sir. Sir, first of all, if you could just help us to understand the CCS project. We have been positive about getting the approval for last many quarters, but I would say some or the other delay keeps happening. This time, are we certainly positive that in next 1 month, 1 or 2 months, let's say maybe in this quarter, we will get the approval?
Yes, Manav. This time we are definitely confident.
Okay, fair. That's helpful, sir. Sir, my second question, sir, if you could just help us to understand the MCC volumes. So I believe that in this quarter, we had around 5,400. Last quarter 2, we had 4,676. Because I believe that you shared a number of 12,682 for the 9 months. If you can just help us quarter by quarter as to how much volume was sold in every quarter, sir?
Yeah, every quarter, even, this quarter and Q2, Q3 I can give, and Q1, Q3 in the 5,400, first of all, that is a consolidated basis. And in Q3, there is an little, when we compare to Q2, Q3 is almost similar or little lower than that. But Q1 is lower, Q2 is higher, because, I need to check up these figures and then we'll give. Q4, it will increase further. Just as we mentioned that in Q2, we have pushed our volumes because new capacities came into the operations, and then we have pushed our sales, and we have offered some discounts. We have we have compromised with the margins also. And Q2 there is an increase, much increase, and then Q3 it is a little lower than Q2, and Q4 it will be a good quarter.
Sir, if I'm correct, Q2 you had shared a number of 4,676.
That is on standalone basis.
So what is the difference between standalone and console? Because I believe that
consolidated, there is these subsidiaries are there, foreign subsidiaries, Sigachi, USINC, and there the sales happens independently. That's why there is a difference between the consolidated and then even Sigachi Meena also, they are free to procure from anywhere from in the world, and then they can sell it in that region.
So, sir, in that case, my request to you would be, let's say, so whatever that you disclose on a quarterly basis, if you can just maintain, let's say, if you're disclosing standalone, please disclose standalone. Because
Mr. Manav, one thing, there was a question on standalone financials. That's why I quoted those figures. See, otherwise we are mentioning consolidated only. See, there was a question in the standalone basis. That's why I gave that standalone figures.
Sir, my point to you is that we have a capacity of 21,700 tons. And so whatever that we will produce from those plants, we will sell that. Okay, so you might have some income from trading in MCC, so that will go in the consolidated, correct, sir? Whatever manufacturing income comes, it comes in the standalone, and whatever trading income from MCC that comes in the console, sir, is that the way it should be?
Yeah, trading will not be there. Only thing is, if at all it is there, any specialized grade which requires by our wholly owned subsidiaries, then one process we do and then we'll sell it. Any further process we do and then we'll sell it.
Okay. Fair enough. My second question would be, sir, on quarter-on-quarter basis, our depreciation has moved up from 3.2 crores to 4.7 crores. Sir, whatever expansion that we had to do in MCC, that got over, I believe, sometime in quarter one. API, we are not expanding at all as of now. O&M anyways is an assetless business. If you can help us to understand this 50-60% increase in depreciation on a quarter-to-quarter basis, is any asset became operational or you have changed some policy due to which this depreciation has moved up?
No. There is no change in policy. Only thing is there was a CWIP certain amount is there. In Q2 that was capitalized. Now there is no further much, maybe small amounts will be there, but after that there will not be any major capitalization. Whatever it was there in CWIP, it was capitalized on 30th September 2024. Because of that, there is an increase in depreciation also in Q3. Otherwise, even the major portion already is done. Now this fully the capacities also have come into operational and then it's going.
Okay. My last question to you, so if you can help us to understand what will be the tax rate for the year?
Tax rate?
Yeah, correct. Income tax rate.
Tax rate it would be around 25-26% because in Dahej we have this tax benefit is there, SEZ benefit. Because of that, there is otherwise it is under 30% bracket.
Okay, and the next year, so this similar tax rate should also be applicable of 25-26%?
Next 2 years, 2 to 3 years, we'll get that benefit.
Sure. Thank you and all the best, sir.
Thank you, sir. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. Anyone who wishes to ask a question may press star and 1 now. Anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, with that, we conclude today's conference call. I now hand the conference over to Mr. Amit Rajsana for closing comments.
Thank you for joining our earnings con call. We hope we addressed your questions effectively and provided valuable insights into our business and growth prospects. For any additional queries or further information about the company, please feel free to contact our investment relations managers at Go India Advisors. Wishing you a pleasant evening. Thank you.
Thank you all.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.